Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com. Can the market look past this most recent government jobs report? We're going to see if our strategists here can shed some light on that. Equity strategist Todd Bunton and Brian Bolin and ETF strategist Eric Dutram are going to try to help answer that question for us. On this edition of the Roundtable, Todd, you actually don't expect the market to have much of a negative reaction to Friday's jobs day.
No, and if you look on Friday, the markets were flat to slightly higher.
And then they recovered.
And I kind of have two theories on this. One is they saw it as kind of a one-off anomaly that, you know, if you look at the ADP report that came out on Wednesday, that was over 200,000, and this was just some kind of statistical blip, and, you know, things will improve next month. Either that or they think that, okay, well, the job situation isn't very good. That's one of the main factors the Fed looks at. So, hey, they're going to slow down on tapering, which is bullish for stocks.
Well, we'll get to that in a minute.
Okay.
Eric, you actually say that the next report is going to really tell the story.
Yeah, kind of going along with what Todd was saying, you know, we got to see if this was an anomaly or not, because the previous reports leading up to this one were all pretty solid. And I know a lot of people were blaming the weather for this. I don't know how much of a cause that was for this subpar jobs report, but I think, you know, to just go off this one report is probably a little bit premature, and investors should probably wait until the next one, see how that one plays out.
So you're maybe kind of in that anomaly camp
Exactly.
a little bit. All right, Brian, we have other economic data out this week. In order for stocks to move higher, we have to see continued strength in the economy. So is all of the other data out this week, retail sales, industrial production, is that going to confirm or deny for us the impact of Friday's report?
You know, I think that's going to have a muted effect. The jobs number is kind of the biggest number out there in any one calendar month. So when you have a jobs number that comes in so far below everything, and the market just trading confused by it, really, not taking a real stance on whether this should trade up or down based on this news. So it's going to be kind of a wait and see. We're going to have earnings start to really flow in, you know, towards the end of the month. Right. And I agree with Eric. I think the idea is to look for the next jobs number and see where things kind of land in the revision.
So at this point, has the market priced in stronger economic growth?
I think so. I think that's been the theme over the last several weeks. And if you look, people were always afraid of the taper. Oh, if the Fed tapers, then look out for stocks. I was in that camp a few months ago, but once you started to see the stronger economic growth, then people said, okay, well, we'll take that trade-off. You know, we'll take a little bit less, monetary stimulus in favor of stronger economic growth.
All right, so let's circle back to that taper issue, because one of the issues is that report weak enough to have the Fed postpone any further tapering.
I think it might, because the next Fed meeting is later in January, so they're not going to have another jobs report to look at. This is their most recent, and, you know, the Fed is just as reactionary as everybody else, and I think they see that. Maybe they just, you know, level off where they're at, you know, $75 billion a month right now. Probably just keep it at that, or maybe they do another $5 billion, something small, but I think it definitely has an impact.
Ryan, you don't think so? You think it only changes the amount that they taper?
Right. I think that they're going to continue on the taper. I just don't know that they're going to increase it. I don't think that there's evidence right now that suggests that the economy is that much stronger than we saw it, you know, middle of December when they decided to initiate the taper. You know, as much as they want to say the idea of tapering is to take a little, then a little bit more, and a little bit more, so that you're easing your way off, I think at this point you want to kind of hold steady, because you don't really know right now with that, you know, jobs number where things really stand.
Eric, what do you think about taper on hold?
I think definitely it's going to be on hold, at least for the foreseeable future. I mean, there was such debate about even tapering at all back, you know, these past couple of months, and now with this weaker jobs number and the participation rate for the number of people actually in the workforce at a multi-decade low, right. I think definitely they're going to hold off until they get some stronger data on that jobs front, because that's obviously a big point of concern for the Fed.
Yeah, and the Fed always likes to remind us that, you know, nothing's on a preset course. They're always going to look at the data and decide. Right. So, you know, nothing's set in stone.
Brian, you actually think this could impact earnings guidance here for Q4?
Yeah, I think if, managers that are employment managers that are looking at adding to their staff, they're going to say, geez, oh man, where is everyone? Are they working? Are they not? You know, is there going to be real demand out of the consumer? You know, a big thing over the last couple of years has been don't doubt the consumer. But at this point, you're thinking, are the jobs out there? The participation rate's so low. What is everyone doing? Is everyone, basically working from home on their own side job? And that's kind of the question. Are they all doing just that and also working at another job or not? And, you've got so many variables in there right now that I think kind of very conservative guidance is probably the way things are going to shape up for the first quarter.
And is that actually the phrase they're going to use? Geez, oh man. Can I quote you on that?
You can.
So let's take this another step further. Volatility in 2013 in the stock market was kind of muted. But do these types of reports actually lend themselves to bring more volatility back into the stock market?
Well, I think it's time we did see more volatility. I mean, ever since, like you said, 2013 was way too smooth historically for the stock market. 30% gains in the S&P 500, no serious pullback. A normal, healthy market you're gonna have these mixed economic reports. You're gonna see pullbacks or periods of, flat stock market. That's perfectly fine. People are freaking out over this, but it's not an issue.
Perfectly fine. What do you guys think?
Well, the VIX right now is, I think, at 11, and that's a pretty low figure. I do agree with Todd that we got to see some volatility come back, but at least in these next couple of weeks here, it just doesn't seem like it's going to materialize.
Okay.
Yes.
Anything you want to add?
Yes.
Geez, oh man.
Geez, oh man. What's everyone doing on their own side project?
That's right. And there you have a little bit of an insight, hopefully, on what impact, if any, the recent government jobs data might have on the market going forward. Now, in our next segment, these kind gentlemen will give you their top stock picks for the week, so you don't want to miss out on that.